Good evening, everyone. My name is Dynamite_41. Nothing I say in this video is or ever will be financial advice, so please just take everything I say with a grain of salt. So first off, like always, let me start off with the GameStop chart because I'm a big fan and I'm a big investor in it. No financial advice, all my opinions. I'm entitled to everything, so yeah. But we're at $15.98. We closed above $16 today. We love to see it. And we'll worry about my bull flag chart in another video. This video is specifically a hit piece on Mr. You know who, that one guy, Pacher, Michael Pacher. So he's an analyst for WedBush Securities. He's always talking down about the gaming industry. He said the Nintendo Switches or something like that are gonna go like out of business. He said something along those lines. He's said a bunch of absurd stuff about the gaming industry and how it's dying and how digital is taking over and how there's no monetary value in physical copies of games. And I just want to debunk everything this guy says because it's simply just a bunch of BS. He's a bad actor. He simply is out of the age range when it comes to people like us that are gamers. Let's see. Mr. Michael Pachter was born on January 27th, 1956, so obviously he knows a lot about gaming because he's been around for longer than any of us gamers alone. Anyways, let's go ahead and look at this hit piece that they put out on GameStop and observe it thoroughly and kind of debunk some of this stuff, or all of it. So, GameStop Corp's decision to extend its investment policy to include equities is alarming and an inane move, according to analysts from WedBush, aka that dude Michael Pachter. So, as you can see, they're worried because he's now going to start managing the portfolio for GameStop. So, in other words, he will be purchasing into securities to help their money grow. And I think it's a brilliant idea. I think it's crazy how they're saying it's alarming and inane. From their point of view, they're looking at it as GameStop's not making enough profits, so they're going to have to invest in portfolios. I'm so sorry, Sam is going crazy right now. They're going to have to invest in portfolios and like improve their portfolio over time instead of making actual profits quarter after quarter. And it's just that's their way they're putting it out. That's the article. That's their narrative that they're trying to twist out. That's why Ryan Cohen doesn't say anything, because he knows that these bad actors and these people that put out hit pieces, shills, MarketWatch, freaking mainstream media, they're going to twist every single thing that he says. So that's why he's letting the paper speak for him. We don't need these damn calls. Anyways, in a filing that accompanied the company's third quarter results Wednesday, GameStop said that its board of directors has approved the newest investment policy, which was on the 10K, which lets the company invest in equity securities, as we mentioned earlier, among other investments. GameStop's board has given Chairman and Chief Executive Ryan Cohen the authority to manage investment portfolio. And the filing added, and if you go off of history, Ryan Cohen started up Chewy and sold it off, and he's a billionaire. Ryan Cohen is a billionaire. I believe he's in his late 30s, and if I'm not mistaken, Ryan Cohen has a big stake in Apple stock. I believe 1.55 million shares to be exact. And for them to just put out a hit piece on how he just wouldn't be able to manage the portfolio, well, it's just absurd because he's made great decisions in his whole career, great investments in his career. But let's keep on going. In one of the most inane moves, that's a strong word, ever seen, GameStop's board of directors delegated the authority to manage the company's portfolio of securities to its CEO, and it has extended the investments policy range to include equities. WedBush analyst Michael Pachter said in a note released on Thursday. Of course he did. Investors have a myriad of investment vehicles available to them and therefore do not need GameStop to act as a mutual fund. Well, hate to break it to you, but GameStop is a bank. And a gaming powerhouse in the retailer sector. Anyways, if GameStop truly believes the value of its shares, it should use its excess cash to buy back stock, Pacher said. The company's decision to invest in equities other than its own is alarming, implying that GameStop management believes it will achieve better returns by buying equities aside from its own. WedBush maintained its underperform rating and $6 price target for GameStop. They're still on that. It's funny because GameStop is still running up, but they could continue shorting the stock all they want. I think it's hilarious how $6 is their price target, considering the fact that GameStop has absolutely no debt in a market that is performing absolutely terribly. But also they have 1.2 billion cash reserves and just cash on hand that they could pretty much utilize to their advantage, but they would prefer to grow it instead of let it sit there and not grow value. I don't know why they're going on a rant about that and making it seem like it's a bad thing, but hey, go off, Michael Pachter. You're the biggest shill on GameStop and video games anyone has ever seen, and I am here to expose your BS. GameStop has not yet responded to requests for a comment, and they don't. I mean, what do you expect? They don't really need to give y'all any attention. What is MarketWatch exactly? So have they ever started anything from the ground up other than a business that spreads false information? I guess that's the thing. I'm gonna find success in that. I'm gonna try it out. I'm gonna take some notes, MarketWatch. The video game retailer and original meme stock exited. Sorry, it's not a meme stock. It's a fundamental play. Exited the third quarter with cash and cash equivalents of 1.2 billion compared to the 1.195 billion at the end of the prior quarter. So they did add something positive there. I mean, it's like an afterthought statement. It's just hidden right there. But, they just want to throw that in there. Let's see what else happened. So, of course, net sales were 1.078 billion for the period compared to 1.186 billion to the year's prior third quarter. And of course, they didn't perform as great as the year's prior third quarter, but it wasn't too far off of a difference. The SG&A, which is the selling and general and administrative expenses, were 296.5 million or 27.5% of net sales for the period compared to 387.9 million or 32.7% of net sales in the prior year's third quarter. As you can tell, they're cutting down the fat. They're trimming it all up in the company. They are working that balance sheet. They are flipping things around. Net loss was 3.1 million for the period compared to a net loss of 94.7 million for the year's prior third quarter. I don't see that anywhere on this damn article that they posted, so I think it's just really funny how they didn't post that, because that is a big indicator for the sign of a company turning around. Cash equivalents, and marketable securities, of course, that's the one mention that they made was 1.2 billion, but of course they're going to only use that statement in their article just to kind of twist it around or just add it as a little afterthought comment right there that someone will probably skip over because it's just in its own little tiny paragraph. They definitely know what they're doing with the verbiage in their whole article, and it's all negative connotations about GameStop, but it's all good. I'm here to let y'all know that they're just like that. That's just mainstream media. They lie all the time. Long-term debt remains limited to one low-interest, unsecured term loan associated with the French government's response to COVID-19. So that is not anything to worry about. Literally, that's nothing. So we're good on debt. We have absolutely no debt. We do have 1.2 billion on cash. Anyways, let's go back to this gosh awful article. Okay. Shares of GameStop, which have enjoyed a recent meme-like rally, rose 3.2% Thursday. The stock is down 16.9% in 2023 compared with the S&P 500's SPX gain of 19.4%. So pretty much what they're doing in this little paragraph right here is just comparing the stock price of GameStop versus how the S&P 500 has been performing this year. Of course, the S&P 500 is outperforming the GameStop because it's 500 top performing stocks / companies in that whole little portfolio for the S&P 500. But it is what it is. They're going to make anything they can and twist up anything they could with the wording and the verbiage to make GameStop come off as horrible. And, that's their job. Go off, MarketWatch. GameStop was also a Top trending symbol on StockTwits, a social platform for investors and traders. Whatever. GameStop missed analysts' revenue expectations with its fiscal third quarter results, despite coming in better than anticipated on the bottom line. The shift from physical to digital games continues to weigh on GameStop. According to WedBush's Michael Pachter, on the software front, GameStop underperformed the broader market with revenue segment down 8.7 year over year, he wrote. The software pieces were in place for this quarter for GameStop to deliver a compelling revenue result with games like EA Sports FC24, Marvel's Spider-Man 2, and Super Mario Bros. Wonder. But GameStop failed to do so, significantly underperforming the broader market as it continues to deal with a shift to digital consumption. So, this guy is going on about his digital thing, pretty much notating in a very negative manner that GameStop's physical copies aren't selling shit in the stores. They had all these big release games like Spider-Man, FC24, and Super Mario Bros. And still underperformed. For the record, quarter 3 for retail is usually like the most underperforming quarter, if you ask me. And GameStop still kept up. Regardless of what anything's going on, they still turn things around. They turn down the net loss. Their cash on hand is still high. The SG&A percentage went down, so they are tightening things up when it comes to finances, and they've made a lot of adjustments as far as like the hours go. I believe they're open from like 12 to 9 or 8, and things are changing for GameStop, and people just don't see it. John O, an analyst at Third Bridge, said GameStop continues to face stiff competition from online retailers such as Amazon, the giant, of course. Whilst the softness in Q3 sales was to be expected, like I said earlier, our experts have said that the increasing market share losses due to mass merchants and e-commerce giants such as Amazon will continue to be an uphill battle for GameStop. He said in an emailed statement on Wednesday. So they're going to add Amazon as leverage in here because everyone knows that Amazon is a big giant in the e-commerce retailer, of course. Like, they own pretty much everything. Shit. Like, they own like pretty much all of e-commerce. But who's to say that GameStop is not executing on their own e-commerce? Their website is great, and they have a bunch of deals on there all the time. So I really don't get the point of that, but if you're a supporter of the company and you buy into the stock as well, you should support your own company. That's just me, though. That's my advice right there. And if I'm not mistaken, we do have over 45 million Power Up members for GameStop. So I'm pretty sure GameStop is not going to go away for a while, Mr. Michael Pacher. John O. O. You want to see my O face? O. While cost savings and profitability continue to be a focus for GameStop, there still may be quite ways to go, according to Third Bridge. In one example, our experts have noted that despite all the store closures we've already seen, GameStop is still likely to have twice as many stores today than what is needed. That's debatable. I mean, honestly, they've already been cutting down on stores and like not renewing leases that they don't need for places that get less foot traffic than other stores. So, I mean, they're tightening things down. They're still in the works of things. These guys want everything like that quick. But that's also just how they make their hit pieces. They make them quick. That's why they're so bad, because they don't revise it, because they do it like this. So quick. Terrible hit pieces. They're just too eager to talk shit about GameStop. In its filing, GameStop said it has thousands of stores and e-commerce platforms. However, store-related costs have decreased $5.8 million in the current year due to store closures, primarily in Europe, and it added. And that's pretty much it. Yeah, so there's that terrible article by Mr. Michael Pachter himself and WedBush Securities. And we know damn well, like, this is the same guy. Michael Pachter thinks console gaming will be gone by 2020. As you can tell, people are still buying consoles. Consoles are still being sold as bundles at GameStop. I mean, this guy's full of crap. I mean, how old is he? He was born in 1956. I mean, shit, dude. What? He has no room to speak about video games. It's like a politician that's like over 60 years old speaking about video games. It just doesn't make sense. Let's listen to what this guy had to say in this interview.
For sure. And, I think of GameStop and physical retail the same way I think about movie exhibitors. There's a place for them, and there always will be physical sales so long as it makes sense for the game companies to put games in physical format. So GameStop can survive, but not in its current form. It's got to be much smaller than it is now. And so think about movie theaters. They can survive too if we trim out the unproductive ones. And that's really what GameStop should be doing. So get somebody like, I hate to say it, Adam Aaron to run
Y'all hear this freaking clown? Let me repeat that again. Let me rewind that shit again.
movie theaters. They can survive too if we trim out the unproductive ones. And that's really what GameStop should be doing. So get somebody like, I hate to say it, Adam Aaron to run.
This guy said get someone like Adam Aaron to run GameStop because he'll perform better. Get the fuck out of here, Michael Pachter. This man went to he got his Master of Business Administrative Law degree, marketing degree. Of course he's got his marketing degree. I mean, he's marketing GameStop in a terrible manner. But yeah, he is something else. He is a fudster, and basically he doesn't know what he's talking about. This is just a little meme picture I saw on Superstonk. Their GameStop falls after stock push, and this guy has no freaking idea that GameStop is going up. I thought that was pretty hilarious. Anyways, GameStop is at $16 right now, and I just wanted to put a hit piece out on Mike Pacher because he's just a fraud. He's full of it. He doesn't really know what he's talking about. He's like over 60 years old, probably 70, and he's talking about video games. Sorry, I just can't take his word seriously. He's spoken ill about GameStop. He's spoken ill about Nintendo. He's spoken ill about the Switches. He's spoken ill about a lot of things gaming-wise, and he just doesn't have enough credibility because he's been wrong about every single thing he said as far as that goes. Michael Pacher, who cares what his name is? Feel free to go check him out. If you like to listen to FUD, go listen to Michael Pacher. Go look at MarketWatch. That's all they do. And this is just my opinion, though. This is just my opinion. For all I know, I'm probably spreading FUD for them. But, come on. Let's be real. Numbers speak for themselves. The CEO doesn't have to speak. Otherwise, people like you, bad actors like you, Michael Pacher, are just going to twist words and make negative connotations and terrible hit pieces that are made in a flash like that because they're that bad. Revise your stuff next time and actually make it make more sense. But yeah, nothing bad about GameStop though. They're doing great. I just wanted to spread the word about Michael Pachter in case y'all didn't know who he was. Now y'all know. Anyways, y'all have a good night.